Assalamualaikum warahmatullah. Today I'm going to explain to you about the short and medium term decision making. At the end of this chapter, you should be able to explain the reasons for uncertainties in decision making. You should be able to explain the relevant costs and benefit. In addition to that, you need to be able to calculate and explain limiting factor, discontinuing a segment, special order, make or buy, and further processing decision making. These are all the calculations part. In addition to that, you should be able to explain the qualitative or the non-financial factors in the decision making process. Next, you need to be able to explain the medium-term decision-making, tactical decision. This is a model of the decision-making process taken from Langfield-Smith et al. Okay, first, you need to clarify the problem. After that, specify the decision criterion. Next, identify the alternative courses of action. After that, you gather the information about the relevant cost and benefit. Next, you compare the cost and benefit of each of the alternatives that you have. After that, you select the courses of action, then evaluate the decision-making effectiveness. Okay. If you look from Rosinon et al., this is steps in the decision-making adapted from Groovy 2005. So in order to make a better decision, there are certain steps that must be followed. The first one is, again, you identify the decision problem. Next, you find the options for that solution. After you have found the options, let's say you have option 1 and option 2, then you pick the best option, then implement the option that you have chosen. After that, you need to review, monitor, and check the outcome. Next, you need to provide feedback and rectification. So the management accountant's role in decision making basically can be divided into two, which are create internal analysis to guide the overall business strategy and also provide relevant information for managers to assist them in their decision making. Okay, there are other relevant information. Relevant information in costing. Basically, when you want to make decision, there are two types of costing, namely the relevant cost and irrelevant cost. So basically, relevant cost is the cost that will make a difference between your alternative courses of action, and therefore that will have a bearing on the decision that you make. Whereas irrelevant cost, on the other hand, is the cost that will not make any difference regardless of whether you choose option A or B. So in making the decision, what is important to business is to maximize the profit. In order to maximize the profit, so you need to identify the net benefit, and you want to minimize your cost. So in other words, you will try to maximize your revenue and minimize your cost. So you need to consider the relevant cost. By identifying this, it will help the management to pick the right choice as long as the net effect is either higher profits or lower costs. As I mentioned earlier, of course, if you have your profit, you want to have a higher profit, or if you look at it from the revenue point of view, you want to have higher revenue and you want to minimize your cost. So the concept of relevant cost examines expected future costs and decisions based on the additional costs incurred, as a result of you choosing a particular option. It should also be noted that the relevance also refers to income. So therefore, if there is any additional income gain from choosing that option, so this extra income is considered as relevant and has a bearing on the decision to be made. So in short, as I said earlier, if you look at the relevant cost concept, you are looking at either the cost or from the revenue perspective. If you are looking from the cost perspective, then you would say you want options that will minimize your cost. If you are looking at it from the revenue perspective or from profit perspective, that means you want to you want to maximize your revenue. The net effect, if you are looking at the profit, means the profit you want it to be higher. So, some classification of costs that are normally considered in a decision-making situation. The first one is the sunk cost. So, sunk cost is a type of cost that has been incurred in the past. So, it is also known as the historical cost. So, normally in a decision-making process, sunk cost is considered irrelevant. Why? Because when we make decision, we want to make a decision for the future. We are not making decision about the past. So sunk cost is the cost that you have incurred in the past. Therefore, it is considered as irrelevant in your decision making. Okay, next you will have opportunity cost. So this is the foregone benefit because you choose a certain alternative. So in decision making, so opportunity cost is a relevant cost. Relevant cost, of course, is a type of cost which will make a difference in the choice of your option. Therefore, it is relevant for your decision making. Okay, differential cost refers to the difference in cost between options of decisions. Incremental cost is the increase in cost of a particular option that you choose. Book value is basically the book value of your asset. Okay, special fixed costs relate to costs that are incurred as a result of taking a certain option, which otherwise would not have been incurred. Therefore, it will be considered as a relevant cost in your decision-making process. So as a summary, costs for decision-making can be divided into two. One is the relevant cost, the other one is the irrelevant cost. For relevant costs, variable costs, the examples of your relevant costs will be your variable costs, opportunity costs, incremental costs, replacement costs. All these are your relevant costs. On the other hand, the irrelevant costs that you should ignore in your decision making will be the sunk costs, general fixed overhead, the non-cash items such as depreciation and notional costs. So as a summary, or for example, as a summary, if you look at the alternative that you have, for example, you have alternative A and alternative B. If that particular cost you have to incur if you choose alternative A and you don't have to incur if you choose alternative B, then in that scenario, that cost is considered as a relevant cost. If that cost you have to incur for alternative A and you don't have to, you don't have to incur for alternative A and you have to incur that cost for alternative B, then that cost is considered as relevant. Okay, if the third one, if you have a certain cost and that cost you have to incur if you choose alternative A and you also have to incur that cost if you choose alternative B, then in that case, we will say that that cost is irrelevant. The same goes if that cost for alternative A you don't need to incur and for alternative B you also don't need to incur that particular cost. So in that case, you can say that that cost is irrelevant. So these are the characteristics of relevant information. So relevant information relates to costs and benefits that differ under competing causes of action. So it relates to the future because when you want to make decision, you are making decision for the future. Therefore, past costs cannot be affected by the current situation. Next, you need to look at the timeliness versus accuracy. So more accurate information may take longer time to produce. And you also need to look at the quantitative or the qualitative factor when you make decisions. So quantitative is basically all the information that you can express in monetary terms or in numeric terms. And qualitative information is the item that you cannot express effectively in numerical terms. So in short, your decision making can be divided into quantitative and qualitative. Okay, quantitative, for example, the sales figure, the profitability, the ROI, and the qualitative or the non-financial information could be based on the non-financial information such as the reputations, the brand strength, and the employee morale. Okay, we will look into in detail the short-term decision making one by one. So next, I will explain about the limiting factor, make or buy, discontinuing a segment, special order, and further processing decision making. So with that, I thank you.